So the market's reaction to Nio's Q1 earnings is not that good. We can see that it's down almost 7%. It kind of recovered a bit from the lows, but I believe this reaction is not fair because we know that although Q1 numbers were not good, mostly because of the simple fact that there was a bad delivery. We can see that January, February and March with the blue bars of 2024 were not that great. So it's basically totally summed up to 30,000 deliveries in the first quarter of this year. So it's not that great, but we are already in June, so you can see that April was strong. May was in fact the strongest month they ever had, and everything points to the fact that June will be even better. So I think June is gonna be at least 23,000 cars, and this is important because they already delivered 36,000 cars in April and May. Which is already more than the previous quarter, which they reported today. Now, if you add to that 22 to 23,000 cars, we're gonna get in between, let's say, 58 to 59,000 cars. 58 to 59,000 cars, I said. So that's basically another record for the quarterly basis. And you can see that in the report they said at let's say 54 to 56,000. So I believe they're gonna beat that for once. They've been probably in this case a bit cautious and haven't promised too much, but I believe, yeah, this is gonna be beat 58 maybe. So what would that look like? So here I have basically done some extrapolation. So these are the gray number, Q1 of 2024, they reported today. So you can see there that the vehicle deliveries, my estimation is, as I said before, 58,000 for Q2. And for Q3, 70,000. And then when the sub-brand Onvo comes online by end of this year, maybe we're gonna reach 90,000 deliveries. Also basically taking into account that the average selling price of the cars will go down. So let's see where that basically gets us with the margins and the profit and net loss. So on this quarter, you can see the revenue was 1.3 billion US dollar. The other sales are, again, as we can see, also visualized here. The other sales for Q1 of 2024 is at 212 million. And that's what we mentioned before, that this one is a bit more steady. This doesn't necessarily depend on directly on the vehicle deliveries on a monthly basis. So this is good to see, but you can see the sharp drop for this one compared to, let's say, Q3 and Q4. But it's all dependent on the deliveries. And you can see here again, Q1, 30,000. It's quite a drop off from the previous two quarters. But then again, my expectations, you can see that we're gonna probably set a record on Q2 and Q3 and most likely Q4 as well. And by Q4, probably the Chinese economy will do better. So my suspicion is that the average selling price maybe not will be affected as much if the consumer in China is more strong by end of the year. We'll see about that, but these are just projections. But anyways, you can see that the cost of sales came in at 1.3, gross profit at 68 million. It's nothing for Nio, but it's quite important to remember. If you just compare this to the 2 weak quarters of 2023, which were Q1 and Q2, look at the gross margin they had back then. We are already back at 5. And the gross profit obviously is much higher than those 2 quarters combined as well. Again, not a whole lot compared to Q4 and Q3 though, but this is where things will change for the better, because they mentioned that the gross margin will improve quite a bit in Q2. I assume 9.5%, simply because of, you know, that at 58,000 cars, we are roughly in the same ballpark as, let's say, Q3 last year. So what gross margin did they have at Q3 last year? So in Q3 last year, they had a gross margin of 8%. And I'll believe that they'll beat the delivery number by let's say 5 to 10%. But I believe also they should beat the gross margin by a bit. So let's say 9.5%. I think it's quite realistic. But I stand corrected if someone has better ideas. But anyways, that would leave us with, let's say, the vehicle margin. This is just a wild estimation. But with the research development expenses at 410 million, so a bit of increase compared to Q1. SG&A roughly in the same ballpark, and that would get us loss from operations at 600 million and net loss at assumingly 570 million. So let's say getting close to that $500 million in loss per quarter. And we know that the company is sitting on 6.3 billion as of the earnings reported today. That would be basically the last day of March of 2024. So at this run rate in Q2, maybe you have enough money to survive for 12 quarters or something thereabouts, 12, 13 quarters. So that's like 3 to 4 years. And also looking further ahead, if we look at Q3, if they deliver 70,000 cars, and again, I don't believe this is unrealistic at this stage. If the economy in China stays as it is today, they are delivering almost 7,000 cars on a weekly run rate as of last week. That would give us, as I said also on the thumbnail, 28,000 to 30,000 cars monthly run rate, just based on the Nio brand, let alone the sub-brand Onvo, which I essentially took just, let's say, nothing of these 70,000, nothing of those is essentially Onvo, which is, I guess, not realistic. But anyways, assuming 70,000 cars, a bit of decrease of average selling price, and then that would give us a revenue of $3 billion US, of which 245 million is other sales. Now, the interesting part here is, again, I increased the gross margin a bit because I believe that's realistic since the volume goes up, and we can see that the gross profit will increase almost 40% compared to the estimated Q2 numbers. So this keeps increasing very fast now, and you can see that the gross profit, again, assuming a bit of increase in gross margin by Q4, is over $500 million in gross profit, and that basically, with consideration of the expenses, the R&D and SG&A, you would get to a net loss of around 300 million. And by that time, you should have, I don't know, let's say 5 billion, 5.3 billion in cash on hands. So 5.3 billion exiting of, let's say 5 billion in cash on hands by Q4 of this year, so by end of this year, and a run rate of making a loss of 300 million each quarter. So that still gives Nio 3 years of, safety with the cash on hand. But my suspicion is that, if you do this thinking and go onwards in Q1 of 2025 and so on, maybe Nio will break even at second half of next year. So they're gonna stop burning money already by Q4 next year. So in my opinion, things are really starting to look better, and you can also see it. I mean, sure, we are still not back at this, the margins that they had, the gross margins of, late 2021. You look at this, like 17%, 14, 15%. But also the worst part, this is the reason the stock took a hit. Like, look at these 3 quarters: Q4 2022, Q1 2023, and Q2 2023. Like, these gross margins kills the business. This is why they needed to dilute a bit of the share. But I believe, we are going in the right trend. Now, again, you see that this is bad compared to the previous 2 quarters. But that, again, depends solely on the really awful delivery number that we had in Q1 this year, which is partly explained that usually you can see that deliveries in, let's have a look at the graph here a second, please. So you can see that even last year in 2023, it was quite weak to start in beginning early of the year, and then it kind of, if you look at the green bars, you can see that it really recovered by second half. And I think we will see the same kind of scenario. And in addition to that, in China, there's the Chinese New Year celebration holidays for 2 weeks, I think, and it's usually in January or February. So this is why the affected numbers of Q1 of each year is bad. So yeah, going back to my train of thought there, you can see that the deliveries will increase. I believe the other sales will get close to 300 million each quarter by middle of next year. And I believe as well that the gross profit, my projection is 500-600 million gross profit by Q4 this year, and maybe 1 billion gross profit by Q4 next year, which would end up in a place where they will start to essentially make some money. Maybe not a lot, but they will not burn cash anymore. And that's important for the business, because Nio right now is a company that's at a market cap at 10 billion. And if you look at my projections here, so going to, let's say, Q4 revenue of 3.7 billion. And let's say Q4 of next year, I don't know, maybe 4.5, 5 billion US dollar in revenue. That's our yearly revenue of at least 15 billion, 20 billion US dollar, and the entire company is valued at 10 billion. And if you assume a 20 billion run rate by even, let's say, late 25 or mid 2026, if they only make like 5% profit margin of that 20 billion, what is 5% of 20 billion in revenue? That's 1 billion in profit. So essentially, if you extrapolate to 2026, maybe Nio is gonna make 1 billion in profit that year, and that's gonna give you a price to earnings ratio of 10 if you buy it today. Yeah, I think that's not richly valued at all. I think and God knows, like, you know, if the gross margin and the gross profit increases a bit, maybe they make 2 billion in profit. And yeah, so I think this company is not expensive anymore. But that's my ideas for today, and thank you for watching, and see you next Tuesday when I'll update the delivery number of that coming week. So thanks.